So we are told here, Sorry Limited produces and sells 3 products, A, B, and C, multi-products. Sorry Limited has contracts to supply products A and B, which utilize all the specific materials that are available to make these 2 products during the next period. The revenue that these contracts will generate and the contribution to sales, CS ratios of products A and B are as follows. So I can see the CS ratio for A 15%. I can see the CS ratio for B of 10%. Product C will generate a contribution to sales of 25%. The total fixed cost of Sorry Limited are 5.5 million during the next period. The management has budgeted to earn a profit of shillings 1 million. Required, they want us to give them the revenue that needs to be generated from product C for Sorry Limited to achieve the budgeted profit. This is quite a straightforward question, ladies and gentlemen. What they wanted me to do in this question is to remember the formula of contribution margin ratio. Is there anybody who is able to remember the formula of contribution margin ratio? Anybody who can remember the formula of contribution margin ratio? Remember, contribution margin ratio is also known as what here? C over S ratio. It is also known as C over S ratio. Contributions to sales ratio. And how do we get it? There are 2 formulas. Formula number 1, to get CMR, we can take, in this case here, contribution per unit divided by selling price. You can take contribution per unit, which is known as contribution margin. You divide this by the selling price. Number 1. Number 2, you could also come and adopt this formula where you say contribution margin ratio is total contribution all over total sales. Total contribution all over total sales. So in this question, they have given me total contribution. They have given me total sales. I can see total sales for each product. Sales is the same as revenue. And then number 2, ladies and gentlemen, I can see the CMR. CMR is the same as CS ratio. So if I'm the one, in this case here, who is doing this kind of a question, I can see some low-hanging fruit. The low-hanging fruit here will be to get the total contribution for each product. Total contribution from each product. So could you kindly make total contribution the subject of the formula? Make total contribution the subject of the formula from the second equation. So from the second equation, the total contribution will be equal to CMR times what here, somebody? Times total sales. The total contribution will be CMR times total sales. So then could you kindly do me a favor? Could you kindly give me the total contribution from the first product known as product A? Is there somebody who is able to give me the total contribution from product A? From product A? From product A? Is there somebody who is able to give me the total contribution from product A? To get the total contribution from product A, I will pick the CMR of A, and the CMR of A that I'm able to see there is 15%. So I will take 15% times the total sales of A. Times the total sales of A. The total sales of A, I can see total sales of A is 10 million. 10 million. So can somebody give me this figure? I'm getting the total contribution for each product. I'm getting the total contribution for each product. Right? And if you'd want me to assist you guys greatly, please give me answers. Give me answers. Respond. Give me answers. Respond. I'll be so happy to hear you guys giving me answers. Yeah, so Winfred tells me 1.5. So A will contribute 1.5, right? How about in this case here, boy? I can see the contribution percentage of boy is 10%, right? Times in this case, ladies and gentlemen, the sales of boy. Sales of boy, I can see it is 20. So I can see a cool 2 million there. And then remember, I have the third product. The third product is C, whose contribution margin has been given to us. In note number 1, they're telling us product C will generate a contribution to sales ratio of 25%. So it will be 25% of the total sales of C. And the total sales of C is not known. The total sales of C is not known. This is what they want us to calculate for them. So in this case here, the total sales, look at required, the revenue that needs to be generated from product C for Sorry Limited to achieve the targeted profit. So we are saying that let the sales revenue of C be X. So then, ladies and gentlemen, this will give me 0.25 what here, 0.25x. Once I reach here, these are simple marks. These are the low-hanging what here fruits. These are the low-hanging fruits, ladies and gentlemen, that I'm talking about. Low-hanging fruits that I'm talking about. The other thing, ladies and gentlemen, that I'm supposed to know very fast is that the total contribution that we generate, total contribution should cover full column number 1, fixed costs of a firm. We contribute towards fixed cost, that's the number 1. And then number 2, we contribute towards what here? Getting a profit. Total contribution should cover fixed cost. And then number 2, the profit of the organization. So you're saying something very important, that basically my total contribution should be equal to fixed cost plus profit. Fixed cost plus profit. Total contribution should be fixed cost plus profit. Very important for us to appreciate this. And the total contribution that I have here is given here. It is 1.5 plus 2 plus 0.25x should be equal to the fixed cost of the firm. Has this examiner given me the fixed cost of the firm? Has this examiner given me the fixed cost of the firm? Has this examiner given me the fixed cost of the firm? Yes, they've told me in note number, there is a place they've told me in note number 2, fixed cost is 5.5. So the fixed cost is 5.5. How about profit? Is there any profit that these guys are envisaging to get? Any profit that these guys are targeting to get? Any profit they're targeting to get? Yeah. It's 1 million, isn't it? All my figures are in millions. So in this case here, we have here plus a profit of 1. So then this will give me, this is 3.5. So 3.5 plus 0.25x should be equal to what here, somebody? Should be equal to 6.5 million, like that. So my work tonight is to make X the subject of the formula. That is my work tonight. Make X the subject of the formula. Make X the subject of the formula. Yeah, Gordon Wari is able to give me 12. Thank you very much. So if you try, in this case here, taking this figure to the other side, it will become a negative, of course, on the other side. So it shall be 0.25x equals 6.5 minus 3.5 million. Ladies and gentlemen, this will be 0.25x equals, this is 3 million, like that. Then if that is the case, so I'm saying here, very importantly, that 0.25x, I'm repeating this, 0.25x equals 3 million, and therefore x will be 3 million divided by 0.25, which students are giving me a figure of what here? A figure of 12 million. What most students here were not able to remember is this. Remember, for you to be able to get x in break-even analysis, to get X for any targeted profit, we normally take fixed cost plus the targeted profit, or pi, like that, all over contribution margin. all of a contribution margin. I know what most of you will tell me, but Mwalimu, how about X break even? X break even, of course, is the one we leave out the profit, because at break even point, profit should be 0. At the break even point, profit should be 0. So in this case here, X break even will be fixed cost over what here over CM. But for any targeted profit, whenever you are targeting some profit, ladies and gentlemen, then at the end of the day, to get X here, you have to take the fixed cost, because that has to be covered. If you can't cover fixed cost with your contributions, you're going to close, right? And if possible, for purposes of proper stakeholder management, would want, after you've covered the fixed cost, would want you to earn what here, somebody, some profit. Some profit. The contribution should be able to, you're contributing towards fixed cost recovery and, of course, profitability. Two things here. So it means that this numerator, normally it is the total contribution. I would want to reiterate here and remind ourselves, ladies and gentlemen, that whenever they want us to really get some of these things, we don't have to think about the formula always. This is a formula of a break-even analysis. This was a straightforward question that wanted me to get total contribution from each product, and then I add them. And then at the end of the day, I should have remembered the total contribution is the same as fixed cost plus what here profit, which is pi or t targeted profit, like that. This is so important. I would want you guys to write this again, and then you do what here, you highlight. You highlight it like that. So in an exam situation, how many of us would have gotten this question correctly? In an exam situation, how many of us would have gotten this question correctly? All of us, isn't it? All of us. All of us. Actually, you see, yes. There. All of us. Nobody has spoken anything. Mary Achoki says no. But have you been able to pick the concept now? Have you been able to pick the concept, especially this concept of low-hanging fruits, getting contribution from each product, right? Putting these total contributions together. And then at the end of the day, remember that the total contribution should be equal to fixed cost plus what here? Plus profit. So have we been able to pick some concept there, which now you guys can build on later? Eric says a bit confusing, but now it means you have to really work on it. You have to work on it. Especially the most important thing here is the low-hanging fruits. The low-hanging fruits. Once you appreciate the low-hanging fruits, the other things in this case here, you can leave them out. Thank you so much. November 2017, question number 4A. November 2017, question number 4A. November 2017, question number 4A. You can see, like in this sitting, they gave us 2 questions from CVP analysis. They gave us 2 questions from CVP analysis. So November 2017, question number 4A. Question number 4A. Question number 4A. Great. BPO Limited. Are we there? Are we there? November 2017, question number 4A. Are we there? BPO Limited is planning to launch a new product into the market. In order to determine the introduction or selling price of the product, a market research was undertaken. The following information has been obtained from the research under 2 possible selling prices, shillings 300 and shillings 350 per unit. So they have given us here selling price, right, per unit, shillings 300, of which I can see the sales volume is probabilistic. Selling price, I can see again there of 350, volume is probabilistic. Additional information, the variable production cost would be 120 per unit for production volumes up to and including 100,000. However, if production exceeds 100,000 units each year, the variable production cost per unit would fall to 110 for all units produced. Number 2, advertising cost would be 9 million per unit at a selling price of 300 and 9.7 million per unit at a price of 350. Fixed production cost would be 4.5 million per annum. Advise the management of BPO Limited on the optimal selling price per unit. This is a very fair examiner. What many students here were not able to analyze very well is this variable cost, which is fluctuating depending on the units that are being produced. So I would want us to look at, if the selling price is 300, what will be the profit we shall make? So profit, if selling price equals 300, 3 possibilities here of volume. All right. So volume could either be 120,000, 110,000, 140,000. So create a column here of variable cost because it is the only technical thing that we have. It is the only technical thing that we have. Otherwise, every other thing flows very nicely. Every other thing is flowing very nicely. So variable cost. Are you able to see the variable cost, ladies and gentlemen? Here, the variable cost, not number 1. The variable cost would be 120 per unit for production volumes up to and including 100,000. So 100,000 and below, variable cost per unit, 120. But the moment in this case here we exceed 100,000, the variable cost per unit goes down to 110 because of the economies of scale. So I would want to see whether I've got a bright student here who will be able to interpret and give me the variable cost for this one here. So remember, there are 2 possibilities. The variable cost could either be 120 or 110, abracadabra. So which one should I use here, variable cost? Should I use 120 here or 110? Yeah, all of them are getting, but mwalimu here, throughout, we shall use 110 throughout. 110 throughout. Why? Because these quantities are more than 100,000. They are big. They are maduong. They are big. They are big. We are told the variable production cost would be 120 per unit for production volumes up to and including 100,000 units each year. 120. If you're going to produce 100, maximum of 100,000, that is 100,000 units and below, then the variable cost will be what here? 120. However, if production exceeds 100,000, like these 3, they're exceeding 100,000. If production exceeds 100,000, then the variable cost goes down to 110 per unit. Thank you very much. Thank you very much. So then, ladies and gentlemen, could you kindly come and create a column here for me of contribution margin? Remember, we are bright students. We know that contribution margin is selling price minus variable cost. It is selling price minus variable cost. So in this case, the selling price will be 300. Doesn't matter. The selling price for this table is 300 minus 110,000. Not 110,000, but this variable cost like that. Here we are lucky because we're going to have one figure throughout. So could you kindly give me this difference? Could you kindly give me this difference? 300 minus 110 gives me how much? Gives me 190. Thank you very much. So I have here 190, 190, 190. So please come here and give me the total contribution. So remember that total contribution is CMX. Total contribution is CMX. It is contribution per unit times what here? Somebody number of units. So like now here, I know it will be 190 times 120,000. You can decide to put your figures in shillings, millions, I think, or thousands, depends on which looks beautiful. So total contribution is contribution per unit times number of units. contribution per unit times number of units. So could you kindly give me this figure? Odinga gives me 22,800 here. 22,800. So are your figures, Odinga, in terms of thousands? Or you simply took everything? No, it can't be in terms of, it can't be everything. So in terms of thousands, right? So in terms of thousands. So whatever you get there, please divide by 1,000. Whatever you get there, divided by 1,000. Whatever you get there, divided by 1,000. So the first one, I'm being told it's 2,900. The first one. Let's agree on the first one first of all. Let's agree on the first one. Let's agree on the first one. The first one, what do we have here? First one, let's agree on the first one. Let's agree on the first one. The first figure, 190 times 120,000. That's okay. Great. Thank you very much. How about the second one now? How about the second one? 2,900. Thank you so much. 2,900. And then we have, ladies and gentlemen, the last one is 26,600. Thank you so much. Now, out of this, we are supposed to shave something. To be able to get profitability, there is some shaving to be done. There is some shaving to be done. What am I supposed to shave out of total contribution here to get profit? What am I supposed to deduct? Fixed cost, isn't it? We are supposed to deduct fixed cost. So please come here and give us the firm's fixed cost. The firm's fixed cost. The firm's fixed cost. So they have told us there that we have got advertising cost of 9 million per annum. Right? So we have advertisement. I can't even just come and mention them here. We have advert, and then we have a fixed production. Fixed production. So the advertisement cost they have given us here, fixed production. So advertisement cost they have given us, ladies and gentlemen, here, the first one here for 300, the price of 300 is going to be 9,000 throughout. 9,000 throughout. 9,000 throughout. Like that. Doesn't matter the level of production. Advertising, they have told us in note number 2, advertising cost would be 9 million, but I'm chopping the 3 zeros to be consistent per annum at a selling price of 300. So in this case, it's 9,000 like that. And then we have the fixed production. Fixed production, we're able to see note number 3. The fixed production is 4,500 per annum. So 4,500 per annum, 4,500 per annum, like that. So could you kindly give me the profit now here? So to get profit here, I'll take the total contribution minus this advertising cost minus the fixed production cost. So I'll take this 22,800 minus 900 minus 4,500, and then I should be able to get the profit. Yeah, Sharon gives me the first figure is 9,300. 9,300. Thank you very much, Sharon. That is the first figure. How about in this case here, the second figure, 7,400. The second figure is 7,400. How about the third figure? 13,300. 13,300. And then the beautiful thing is that these guys have given us probabilities. Is there somebody who can see probabilities? Are you able to see probabilities that have been given there? Is there somebody who can see probabilities that have been given there? They've given us probabilities. So I should be able to capture those probabilities here live. I should be able to capture those probabilities live. For the first volume, the probability is 0.4. The probability is 0.5. And then we have 0.1 like that. Now I can easily, ladies and gentlemen, so correct the last one. The last one I'm being told is 13,100. The last one, thank you so much. Thank you so much. The last one is 13,100. So ladies and gentlemen, what I need to do now with the profitability, and I have the probability there, then I need to come and give them what we call the expected profit. So the expected profit, what we have there. So we have 9,300 times 0.4 plus 7,400 times 0.5 plus 13,100 times 0.1, like that, which will end up giving us what figures and gentlemen? Which will end up giving us what expected profit? Please help me out here. 87.30. 87.30. Now, I want to give you guys exactly 10 minutes and see whether you'll be able to do for us a profitability statement if now the selling price changes to 350. If the selling price changes to 350, is there anybody who will be able to give us the profitability statement? I'm giving you exactly 10 minutes. Exactly 10 minutes. Please try your best. Please try your best. Please try your best. Profitability analysis of the second price. Profitability analysis of the second price. So I'll still borrow this same table here, same format, everything. Same format, everything. But now remember, there were two prices. 300 and a price of 350. So this time around, we're going to the second part of the table. So I can see here we have sales volume. So I can see here that we have sales volume. So the sales volume, we have 108,000. Sales volume, we have 108,000. We have 100,000. Then we have 94,000, like that. Now, remember the concept of variable cost. That variable cost below 100,000 units, 100,000 is and below, we shall incur a variable cost of 120. Anything that we produce above 100,000, if we produce above 100,000 units, then variable cost goes down to 110. So like now here we produced more than 100,000 because 108 is more than 100,000. So this must have been 110. How about this? Can somebody give me the variable cost of 100,000? Variable cost of 100,000. Should I use 120 or 110? Somebody talk to me. Should I use 120 or 110? You're right. I should use 120 because you see 120 takes into consideration all the units that we produce up to 100,000. That is what this examiner told us, that variable production cost will be 120 per unit for production volumes up to and including, to emphasize, use the word including, up to 100,000. So how about this 94,000? 94,000, what variable cost should I use for 94,000? I can see it's less than 100,000. No, it's less than 100,000. It's less than 100,000. It's less than 100,000. 94. I should use 110. Let's check again. Yeah. How much? This one here. All of them are saying 120. All of them are saying 120. You guys are very bright. It's less than 100,000 units. And anytime you produce less than 100,000 units, then the variable cost will be what here? Somebody without any confusion will be 120. Thank you so much. You stood your ground. So please come and give me contribution margin. The price now is 350. 350 throughout. The price is 350 throughout. Minus, minus, minus. Here we have 110. Here we have 120, there we have 120. So could you kindly give me these figures now? Kindly give me these figures. The first one, 240, 230, 230. 240, 230, 230. So having gotten that, now we can easily get the total contribution in shillings thousands. Remember, for us to get total contribution, we take contribution per unit times number of units. So we have the number of units here, X here. And we have the CM here. So we take this and this, divided by 1,000 because our figures are in terms of thousands. So the first one, according to Gordon Ware, is 91.24. The first one is 91.24. How about the second one? Nope, that figure is not correct. The first one, I'm being reminded there, It is 25,920. The first one is 25,920. The second one? The second one is 23,000. The second one is 23,000. How about the third one? $21,620, isn't it? The third one is 21,620, like that. Advertising costs for this price of 350. Have they given us the advertising cost of the price of 350? Have they given us the advertising cost of this price? 9,700. Thank you very much. 9,700. This is going to be constant. How about in this case here, the fixed production cost? Have they given us the fixed production cost? Fixed production cost, they gave us a figure there of fixed production cost of 4,500, isn't it? Thank you so much, 4,500. Now, ladies and gentlemen, if you take this minus that, minus, you should be able to give us the profit. We should be able to give us the profit. We should be able to get the profit there. So the first one is 11,720, 11,720, 11,720. All right. The second one is 8,800. 8,800. How about the third one? 74,20. Thank you so much. 74,20. Thank you so much. Thank you so much. So now, having gotten profits, have they given us probabilities for the events? Have they given us probabilities for the events? Probabilities for the events. Oh, yes, it is 0.3, 0.3, 0.4. So we have 0.3, 0.3, and then 0.4 like that. Ladies and gentlemen, what I would want us to do very first is to come and ascertain the expected profit, the average profit. So the average profit there will be 11,720 times 0.3 plus 8,800, 8,800 times 0.3 plus 74,20 times 0.4, which gives us what figure at the end of the day? 91,24, yay! And I remember that there are students who got this 91,24. Thank you so much. So of course, the examiner wants you to advise them in terms of the price to pick, the price to select. The price to select here should be the one that yields a higher profit. So in between the two, you compare which price gives us a higher profit. Which price gives us a higher profit? So I'm being told 350. So 350 is the one that yields this higher profit, and therefore we recommend the Kenya shillings 350 to be the optimal price. You get all the marks. You go to the next level. You get all the marks, and then you go to the next level. You say bye-bye to these papers. So in an exam, is there somebody who could have aced all the marks here? Is there any student who could have gotten all the marks in this question? Eric, yes. Doreen, yes. Great. At least here we have got many yeses. Thank you very much. At least now here we have got many yeses. I'm so happy. Yes, I'm so happy. Yes. Nobody would have missed any single mark there. Thank you so much. In my wildest dreams, I expect a question of this nature to be in your exam. So very important. So May 2016, question number 2. 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 Yes. Examiner wishing you success. Yes. An examiner who gives you this kind of a question, or even like a simulation analysis, is an examiner who is wishing you success. So May 2016, question number 2. May 2016, question number 2. I would want you guys to read this question first of all. Please read it, and then you try doing it, and then we discuss it. Read the question first of all. Is this an easy question? Is it an easy question? Is it an easy question? Somebody be very honest without fearing anything. Tell us whether it's very easy or not. If it's very easy, we go to a different question, right? If it's very easy, we go to a different question. They're saying no, so we do it, right? It's too mechanical. We do it. We do it. Great. So you're told here the Raha Resort, which is privately owned in a world-famous luxury hotel and a cricket complex. Just like how you can have a hotel right inside the Mara. It has been chosen as the venue to stage the Ribbon Cup, right? Ribbon Cup, a cricket tournament which is contested by teams from across the world. The tournament is scheduled to take place during the month of December 2016. The resort will offer accommodation for each of the 5 nights that each guest would require accommodation. The following information is available regarding the period of the tournament. Hotel data, total number of rooms we have are 2,400. And then the rooms mix, we have 75% are double rooms, single rooms are 15% out of the 2,400, and then family rooms are 10%. There is a low-hanging fruit there. I need to redistribute these 2,400 rooms to those 3 categories. So out of these 2,400 rooms, we know that 75% are double rooms, right? 15% are single rooms, all right? Then we have 10%. 10% are what here? 10% are family rooms. So could you kindly give me these figures? So 75% of 2,400 gives us how many double rooms? Yes. Naivasha Safari Rally. So double rooms will be, 2,400 are the total number of rooms, of which they've given you the percentages going to 1,800. They've already given me the figures here. So double rooms are 1,800, and then single rooms are 15% of 2,400. Single rooms are 360, and then 10% are family rooms, 240, like that. Great. There's a low-hanging mark there. And then I can see fees per room per night. So fees per room per night is given there. So if somebody stays there for 5 nights, I'll be multiplying these figures here with what? With 555. I'm able to pick a few marks here and there, really. Because, each guest who comes to us will stay with us for 5 nights. Number of guests per room, double rooms, 2. Single rooms, you cannot sleep with somebody there. Single rooms, 1. Family rooms, 4 people. Note, when occupied, all rooms will contain the number of guests as above when occupied. So you can't come and tell us, you know what, I'm rich. I want a double room and sleep there alone. No, for us, if it is a double room, you must sleep 2 of you there. 2 of you. Great. So you're told there, variable cost per guest per night, 1,000. So I'll be able to get contribution margin. Attributable fixed cost for the 5-day double rooms are 5,160,000. Single and family rooms total 3 million. Accommodation for guests is provided on all inclusive of foods, drinks, and entertainment. The hotel management expects all single and family rooms to be sold out for each of the 5 nights of the tournament. However, they are unsure whether the fee in respect to the double rooms should be increased or decreased. At a price of shillings 4,000 per room per night, they expect occupancy rate of 80%. of available double rooms. For each shillings 100 increase stroke decrease, they expect the number of rooms to decrease stroke increase respectively by 40. The objective of the hotel management is to maximize profit. Great. The fees that should be charged per double room per night in order to maximize profit during the tournament. During the tournament. So somebody is saying that my sound is too low. Are you guys able to hear Mwalimu? Are you guys able to hear Mwalimu or right? So it is from ML's side. Thank you so much. Thank you so much. After all, today I don't want to shout quite a lot because I have AFM immediately after this. Great. Thank you very much. It's clear. It's clear. Thank you so much. You guys have made me happy with saying it's clear. It means that I can easily whisper and people will be able to hear me. Now here, they are talking about double rooms. Double rooms. So they've told us something there, that when we charge a price of shillings 4,000, when we charge a price of shillings 4,000, we shall get an 80% occupancy. 80% of double rooms will be full. 80% of double rooms. If we charge 4,000, look at note number 3. If we charge 4,000, look at note number 3. The hotel management expects all single and family rooms to be sold out for each of the 5 nights of the tournament. However, they are unsure whether the fee in respect to the double rooms should be increased or decreased. At a price of shillings 4,000 per room per night, they expect occupancy rate of 80% of available double rooms. So remember up there, you guys had given me the double rooms that are available. Is there somebody who is able to remind us that the double rooms, number of double rooms that we have from the working we did up there? 1,800. So 80% of 1,800 gives me how much? 80% of 1,800 gives me how much? 1,440. Great. Now, great. So this is the first price. So remember here, when you read this question very well, they've told us that for each shillings 100 increase or decrease, they expect the number of rooms here to decrease, stroke increase respectively by what here? By 40. Whenever you hear of this language that when you increase price by this amount, the quantity goes down, that automatically signifies what we call linearity. That signifies linearity. A straight line, how many points do you need to be able to define a straight line? You need 2 points. The first price point has been provided. So I'll have to look for the second price where I'll use the information given that if price increases by just 100 bob. So if price increases by 100 bob, I'll talk of shillings 4,100. Who can in this case here tell me how many units of these rooms am I going to sell? When I increase the price by 100, demand goes down by how many units? When I increase the price by 100, demand goes down by how many units? They've told us something very important there, by 40. So if I increase this by 100, it means that I take this 4,000 plus 100, and then the quantity consumed here now will go down. So then here we'll talk of 1,440 minus 40, which gives me how much here, somebody? 1,400. You should never even get worried of this, like when you increase or decrease. No. Just know the basic rule of demand, that when price goes up, quantity is inversely related. Quantity must go down. Quantity must go down like that. Ladies and gentlemen, the moment I get my 2 points, then it'll come to my mind that the general form, the general price equation is A plus what here, somebody? BX. This is a general form of a straight line equation. Now, once I have the general form of a straight line equation, I will very comfortably come and form 2 equations. Please give me the 2 equations. We see whether there is anybody who will be able to give me the 2 equations very fast here. Please form the 2 equations. We see. Form the 2 equations using this general form. You plug in the first point. You plug in the first point. You plug in the first point. So when you plug in the first point, somebody, what do we have here? When you plug in the first point, the price I'm plugging in here, the price is 4,000. The price is 4,000 equals A plus B X. Remember, this is the quantity X, eh? So B 1440, B 1440. I can't write it like B 1440, number must come ahead. So it's supposed to be A plus 1440, boy, equation number 1. How about equation number 2? How about equation number 2 using the second point? How about equation number 2 using the second point? So equation number 2 will move like this. So we know that the price for the second equation is 4,100. So 4,100 equals A that I don't know for now, A plus B times X, and X is 1,400, so B 1,400. So it'll be 1,400 what here, boy? It'll be 1,400 boy. So it'll be 1,400 boy like that. So now do me a favor, using whichever method you like best, could you kindly give me the value of A and B, please? Give me the value of A and boy. Please give me the value of A and boy. Give me the value of A and boy using your means. Using whatever means, give me the value of A and B. This thing is not a hard thing. What they're telling me is that we can easily come and eliminate A by subtraction. So then this will give me minus 100 equals this disappears. This gives me positive 40 boy. Meaning that boy will be minus 100 over 40, which gives me what figure? Minus 2.5. Thank you very much. So minus 2.5. That is the value of boy. So then what is the value of A from equation 1? So from equation 1, what will the value of A be equal to? So in this case here, from equation 1, we have 4,000 equals A plus 1,440 boy, and the boy is minus 2.5, remember. So then this would mean that we have our 4,000 here equals A plus, what is this times this? Somebody give me it will be negative. This and this will be negative. Somebody give me a figure there. Please help me. Please help me out. Yeah. So we have ESA giving me minus 3,600. Not by the 2. So please let this cross over the equal. When it crosses over the equal, it becomes positive, right? So it will be A equals 4,000 plus 3,600, which is 7,600. That is A. And I have B. So then my work tonight will be to come here and write the price equation now comfortably. So you mentioned there the price equation. The price equation. So price equation, we already have A, we have B. So it will be price equals A. A, you guys have given me a figure of 7,600 plus B. B itself is negative. So negative 2.5 what here? X like that. That is the price function. That's the price function. That is the price function. That is the price function. Thank you so much. Thank you so much. So whenever you hear a question telling you that when price increases by 100, that is a linear price equation they want to test you. They want to knock you down using it. When you hear that like prices increasing by 100, consumption going down, that's your normal demand equation, which is also known as what? The price equation. This is a concept that this examiner has used to knock down on so many students. It's quite a common area. But we aren't yet there. We aren't yet there. Remember what this examiner wanted us to ascertain, ladies and gentlemen, is the fees, which is the price, remember, that should be charged per double room per night in order to maximize profit during the tournament. And then remember, at profit maximum, marginal revenue should be equal to marginal cost. I don't know whether there's anybody who is able to remember this concept. I don't know whether there's anybody who is able to remember this concept. But at maximum profit, very easy, at maximum profit, at maximum profit, at maximum profit, marginal revenue equals a marginal cost. At maximum profit, marginal revenue equals marginal cost. I've got no problem whatsoever with marginal cost. I know marginal cost is variable cost. And I even know that variable cost here is 2,000 for the double room, if I'm not wrong. If I'm not wrong, for the double room, the variable cost is supposed to be 2,000. Is there somebody who is able to see variable cost for the double room? Variable cost for the double room is supposed to be 2,000. Anybody who is able to see that? Please open up and talk to me. Is there anybody who is able to see that the double room variable cost per night is 2,000? Remember, it is 1,000 per guest. And the double room carries how many people? 2. So marginal cost, which is the same as variable cost, I know it is 2 times 1,000. That is what here, somebody? 2,000. 2,000. So I don't have a problem at all with marginal cost. Marginal cost, I know this is 2,000. But how about marginal revenue? So marginal revenue, I have to give you 5 minutes. I know why. For AMA, you must give students time to try. AMA is the easiest paper, but students must try this question first. So I want you guys to take your time and give me the marginal revenue. Thank you so much. In my class, I must have told you that if price is A plus BX, then always marginal revenue, you can take this shortcut where you say marginal revenue is A plus 2BX, like that. Now listen, in this question, do we know what our A is? In this question, do we know what our A is? 7,600, isn't it? Plus 2, do we know the value of B? Do you know the value of B? Do you know the value of B? Minus 2.5. Then of course, X, we don't know X. We don't know X. So meaning that my marginal revenue will end up being 7,600 minus 5X, like that. This is the answer. Very important formula. You guys should even clap for me. I've given you a formula you guys have never known. A very important formula. Marginal revenue equals 7,600. We have to get X. We have to get X. We have to get X. We have only gotten the marginal revenue function. Marginal revenue function. This is a very important function, especially if you hate differentiation. This is a very important function. Very important function. Now, once I get this, remember that you guys had given me, marginal cost. You had given me marginal cost. Mukaniambia marginal cost for the double room. For the double room, mukaniambia marginal cost is 2,000. Na mukaniambia kwamba at maximum profit, marginal revenue should be equal to marginal cost. At maximum profit, marginal revenue should be equal to marginal cost. Marginal revenue should be equal to marginal cost. Should be equal to marginal cost. And marginal revenue now is here. It is 7,600 minus 5X should be equal to marginal cost of 2,000. So bring this here. So it will be 7,600 minus 2,000 equals 5X. So this will be 5,600 equals 5X. X will be 5,600 over 5, which will end up giving us what figure, somebody here? X is 1,100. 1120. X is 1120. Thank you so much. So having gotten that as our X figure, please read again. They want the fees. Fees is the same as what here? The price. So they want price, and therefore price, we know the price function. Our price function was 7,600 minus 2.5 x, which will tell me that price is 7,600 minus 2.5 times x, which is 1120, which will end up giving me what figure at the end of the day as my fees. 4,800. So, ladies and gentlemen, I'm so sure that all of us indeed would have really gotten this question, isn't it? All of us would have gotten this question on exam. True or false? False, eh? Great. We shall overcome. So now I expect you guys now to take your time, finish Roman 2, finish part B. My next class will be on, when is our next class? When is our next class? Is there somebody who has the timetable?